Hello and good morning, everybody. You're with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Markets Outlook session. Starting with the major markets on the globe, the European markets, the DAX 30, the German index, has lost another 100 points yesterday. The pressure here remains to the downside in the short term. The CAC 40, the French index, is in continuation of the downtrend over the last 2 trading days and has lost another 15 points today already. We are waiting for the French GDP data to come out shortly. Mario Draghi spoke yesterday and mentioned the unemployment levels are still way too high in the European zone. And also there's a slack of the momentum of recovery for the European economy. Not a new news anyway. Of course, the ECB is prepared to add measures if needed, even though the lending program has started already, pouring over 80 billion into the banking system in Europe. As I said, we are expecting some manufacturing data to come out today from the calendar, along with the French gross domestic product. Turning our eyes to the British pound, which was the major opportunity deliverer for yesterday's trading day from the currency pairs, for the major currency pairs. As it made a few moves versus the euro, the Canadian dollar, substantial move there, and especially the JPY, the Japanese yen, where there was a 6 years high reached last week, and now it's in a massive correction to the upside. We'll see what happens. US markets, the high-tech Nasdaq has lost another 40 plus points yesterday, along with the S&P 500, which lost another 20 points. Only the Dow, the industrial average, is holding high ground and is again poised to set new records in the short term. Asia, the Nikkei has lost about 15 points yesterday and has recovered half of it already for today's session, even though the pressure remains to the downside over there. The better than expected manufacturing data which came out during the night in China has boosted the Chinese main indexes, along with the Hang Seng in Hong Kong. Commodities. The biggest losers on the market, our safe haven metals, those are. Namely, the gold and the silver are having a very bad last few weeks trading. The silver has lost another $2 of its price to a 4-year low, and the pressure remains to the downside there. The gold, on the other side, which has reached a 14 months low, has managed to regain a bit from yesterday's price action, adding another $6 today already. The bears there are taking control pretty much obviously. Basically, as the demand of gold declined this year, substantial decline, and adding to it the strength of the green bag, which is in continuation and it's growing, both metals are in severe decline. Moving to the West Texas Intermediate, crude sweet oil, lost about almost $5 per barrel, $4.50 to a barrel over the last 5 trading days, reached $90.50 per barrel. The bulls and bears are in conflict there today already, but the above mentioned price is acting as a major support source. So basically we're yet to see how the market will react on the upcoming stockpile change indicator tomorrow from the calendar. Of course, one of the major indicators with regards to commodity trading would be the US GDP data scheduled to be announced this Friday by the end of the week. that was pretty much all from me for today. Thank you very much for your attention, and I wish you a successful trading day. Cheers and bye-bye.